General Motors is planning a big investment in several U.S. assembly plants. For the details on that, we want to bring in Phil LeBeau. Phil, good morning. This is some pretty big news.
It is big news, and it's a significant indication that General Motors believes the tariffs that are in effect, 25% for vehicles built in Mexico and Canada, they're likely to stay in place for an extended period of time. Whether that's a month, 2 months, however long, at some point General Motors, like many automakers, has made the decision, am I better served to bring some production back here to the United States? So here's what it's doing. $4 billion will be invested in several moves over the next couple of years. Most significant, the gas-powered Chevy Blazer that is built in Mexico currently will be moved to Tennessee. Production will be there. The gas-powered Chevy Equinox, also built in Mexico, will now be built in Kansas at a GM plant in Fairfax, Kansas. And in Michigan, a plant that is scheduled to build electric vehicles, that's changing. It's being converted so it will build gas-powered SUVs and pickup trucks. Essentially what General Motors is doing, it's tapping its unused capacity here in the United States. Last year, 54% of the vehicles that it sold in the U.S. were built in this country. That's well below some of their competitors, most notably Ford, which builds far more in this country of the vehicles it sells in this country. But when you look at production costs, there's no debate about this. Everybody in the industry will tell you this. This is how much it costs per hour, all in, to build in the U.S. versus Canada versus Mexico. Far more expensive to build a vehicle in the U.S. than it is in Canada or Mexico. Nonetheless, when you take a look at shares of General Motors, they have made the decision, look, we're leaving too many sales on the table with the vehicles that we're building in Mexico. We can move that production by 2027 to here in the United States. So that's what General Motors has decided to do. Quick note, guys. First of all, you will hear the Trump administration say, aha, the tariffs are working. This is what we told the companies to do. They are doing it. They are moving production back to the U.S. Still unclear how many jobs may be created because of these moves. Number of things at play here. Jobs that were already planned in Michigan, same number there. How many in Kansas and Tennessee? That remains to be seen. But keep in mind, Howard Lutnick has said time and again on our air, you watch, there will be new plants here in the United States. There are no new plants being announced by General Motors. Could happen in the future. But at this point, this is an announcement to use unused capacity in the future to build vehicles that are currently built in Mexico.
Hey, Phil, I thought the most telling part of all of it is the CapEx schedule that they have planned. Their capital expenditures, I don't think are going to grow. It was somewhere between $1 and $1.5 billion that they were planning for this year. But there is a big ramp up expected between now and 2027. And maybe that defines or it gives you a bit of an illustration of how complex these decisions are, how long it takes to ramp up some of these things.
Correct. You can't just flip a switch. You know, it was very early on when the trade wars were beginning that I would hear from people saying, well, why don't automakers just announce we're building a plant and 6 months from now we're going to start building vehicles in Georgia, Tennessee, wherever. You cannot do that, Becky. You cannot just build a plant from scratch and have production start 6 months down the road. Not possible. And this is, for General Motors, the most feasible approach, the one that makes the most sense, especially converting the plant in Michigan that was going to build electric vehicles. Now they're saying, look, the demand for electric vehicles is not what we once thought it was going to be. There's going to be demand for gas-powered SUVs and pickup trucks. Let's take the plans for an electric vehicle plant and convert that plant, retool it so that it makes internal combustion engine vehicles.
I mean, that's the point where you see from administration to administration those huge swings in what they're not only incentivizing with taxes, but what they're basically telling you have to do with the standards you have to meet. Gets so confusing. I don't think they ever thought that was going to be a huge demand without the government incentives and basically the instructions on how efficient your fleet has to be that motivated some of those decisions to begin with.
All of those were factors. All of those were factors.